yellow submarine, yellow submarine, a yellow submarine. We all live in the... Well, hello. Are you underwater quite a lot? Well, let's answer one of the most important questions of trading. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the singing talent that is the Scruffy Trader. Now I've got my coffee in hand, it's the weekend, so it must be coffee time with Scruff. So what's coffee time with Scruff? Well, it's basically where I ponder my thoughts across the weekend from some of the emails or comments that I've had, and just give you my take on it, I guess. So if you like that sort of thing, please click the subscribe button. Genuinely helps. If you want to see a little bit more about my trading or find some tools that you can use, go down in the description. So what am I pondering today? Well, it's a very simple question. How do you avoid being underwater? Well, it's quite a stretching conversation, to be honest.
Are you serious?
We're all underwater at any one time. Now, a lot of the time when I go into market, I am expecting to be wrong, and I'm almost surprised when I'm right. Why is that? Because we don't have one of these. And if we did, it would be a Tom Baker one or a John Pertwee one. Maybe it's even Sylvester McCoy if you're going that far. But never mind, I'll go about as far as Peter Davison back to William Hartnell. They're the proper Doctor Who's, not this imposter they've got at the moment. Say. I tried watching it the other night. I couldn't. This walk environment and all of this sort of thing, it just doesn't sit with me at all. I can't get away with it. Anyway, that's not what you're here for. Well, you might be. Who knows? Well, possibly. I'm here for that. I love my toys and I love science fiction, and it kind of keeps me going. But what's that got to do with trading? It's actually got quite a bit. You see, all the way around my desk I have various toys. My Stormtroopers, my Yodas and things like that. Even my one of my favourites, you know, proper Star Destroyer. And sound effects. But how does that stop me being underwater? Well, they actually stop me fiddling with the charts, and I'm going to get onto that in just a second. You see, when you're a newer trader, the desire to be in the markets is huge, and you need something to calm you down. Now for me, it's a lot of music videos, it's a lot of silly humour when I'm talking to the guys on the Discord and one thing and another. And I know some of them look at it and they'll sort of, oh, just show me how to get in and how to get out. I just want to know your strategy. Well, you failed before you start, so you're probably wasting your time. Because trading is so much more than that. It's very psychological and it's very methodical. And if you can't put those two together, you are basically gambling. And yeah, I know you've heard me say it many times. And it's just really to try and stress it. I see videos all the time. I sat in a webinar this morning by a very, very prolific trader that's advertised all over the place, and he's always, this is the right time to make 500 quid a day while he's sitting in Mauritius, or he's sort of pledging his £500 a day lifestyle trader, and he'll show you exactly how to do it. So I sat through the webinar. No, showed me how to fund a village in Africa, showed me how to fund a village in South America. And then for 2 hours banged on about how brilliant they are and showed you nothing. And why? Because it's all fluff, it's all sales guff. You see, trading is very simple. The market is either going to go up or it's going to go down. Yes, you can say there's a third one where it'll stay in the middle, but ultimately that's what it's going to do. Your job is to make a bias for the day and stay with it. Because that's the other thing that traders fail. They'll see the market going one way and they think, right, that's it, I've got to get in, I've got to get in. But by the time you've got in, that wave is probably finished and you're catching the top, which puts you underwater. Now, if you had a single bias, you could see the market rise in this situation, wait for it to pull back, then enter. And that's where the meddling side comes into it. So what I'm going to do is I'm going to fire the charts up and I shall show you.
Well, we're waiting.
Okay guys, so here we are with the charts and statements, etc. Now I'm starting with this screen before I go on to the charts and show you levels, etc. Just to give you an idea of where I'm at and what I'm doing over the course of the next month or so. As some of you know, I've started a new 5%ers account to build it from inception and then let you watch it grow. Because it's all well and good me showing you my big accounts, which you've seen many times. A lot of us only start small. And this is where being underwater comes into it. Because when you're small, you've got to really plan what you're doing. And I'm going to explain that. Now this one has a balance of 10,000. Now the buy-in to these are relatively cheap. You can do it through the boot camp, or you can go live to market straight away, as this one is, and you'll get profits straight away. So it's quite a low barrier to the markets. And if you're interested, go in the description below, you get 5% off. But what are we looking at here? Well, 41 trades over the course of last week, 37 of which were profitable. So I've got a 90% hit rate on it, and I have a profit factor of 5. Now anything over 1 is deemed profitable. So I'm quite happy with that. Decent equity curve. Took a bit of a slap the other day, but I had the good sense to get out. And again, this is what I'm going to get to. Don't get me wrong, I do get kicked in the balls. I take some horrific losses because sometimes I get it wrong. But my overall trading is profitable. And I can win, which is banking. Then when you get a kick in the nuts, you're still net positive, which is the essence of what we're trying to do. So why is it hard? It's because of this bit here, your drawdown. When you're small, you have a tendency to put your position size on too big, and it doesn't take long to kick you. So if you're underwater with a big position, your stress levels go up. Stress levels go up, you start to fidget. As soon as you are fidgeting, you'll make a mistake, and that's what will cost you money. So how do you get out of it? What do you do? Well, for me, I have a routine. Now my routine is very simple. I do the same thing over and over. There are hundreds of ways to trade, and they are all correct because they all work if the conditions are right. But how do you know what the conditions are? You map your trades out. Now I map mine out the same way. Drawing your levels is the single most important thing you will do, and then trade level to level. It's that simple. And what's that got to do with a slice of bread? Well, I'll show you. I'll take you through it. This is my FTSE, which I've identified for the coming week. Put the levels in that I'm interested in. Now it looks a bit chaotic. Looks terrible. But that's because it's an hourly chart. If I take it out to a daily chart, it looks even worse. But if I drop it into a 5-minute chart, now it looks clean, it looks nice. And I can trade from that level into this level. Nice and simple. What about if I'm underwater? Well, I know what the levels are. So if I've got a level here and I'm in negative equity down here, I can then pound average down onto this level, getting a better price, and still work level to level. And then if it breaks, and I know I'm wrong because you can see the swing low, you get out. And it's that simple. You know, the other part of it is don't outstay your welcome. It's great to get a big win, but when you're intraday trading, you get 10-15 pips. That's a good trade. In fact, you get 5 to 10 pips. That's a good trade. If you're scalping for 2 or 3 and that's your basis for the trades, not so much. Sometimes that's all you're going to get. But if you're setting out for 2 or 3, you're going to get hurt. You're better off setting out for 15 to 20 and then managing your trade. I'll take it down. But let's have a look, see how it's planned out. Now this is my MT5, which I think a lot of people will recognize as being used. I use MT5 and I use a web platform that you've just seen. Most brokers use them. Another broker I use is BlackBull. Again, it'll stretch your pennies out. But what are we looking at here? It's exactly the same as what I showed you on the FTSE. It's mapped out, and I do it all on a Sunday. I pick certain markets that I'm interested in, and it's normally just a basket of maybe 4, and I'll mark them all up, and they're all marked like this, and those levels stay in place for the entire week until they are broken. In other words, I'll figure out where a high is, I'll figure out where a low is. As you can see there, that's the low of that. That gives me a trading arena to work within. All right. So as long as the price stays between those 2 levels, I know that's what I'm working with. And then I'm simply going level to level, level to level each time. And it keeps me out of trouble. Now this is the euro dollar. If I take it down onto the pound, or better still, if I take it down into Winky Town. Hello, my love. Is that for me?
It is, yes.
Oh, we all know Scruffy likes it, Cuffy. He likes Winky as well. And he does. Especially this time of year, it's Christmas. Because she might buy me a Star Wars toy. Well, she better buy me a Star Wars toy or she's wearing that bikini. Either way, I'm happy.
You dirty old man.
You're sitting there, imagining that, with a big smile on your face. You dirty fecker.
Sorry. Right. What are we looking at here? As I've identified earlier on, high and low. Same principle. High point, low point. Arena for the week. This is on an hourly chart. It's all mapped out cleanly. So if I'm trading a 15-minute chart, I know where my entries are. I know where my exits are based on the levels that I've put in. It is very, very simple. And you work from one to the other. And if you do that, you'll be fine. Now that gets you your profits. But the whole premise of this is underwater. What about if you're underwater? Well, that's another thing. So just a case in point, just so you can see, there's another chart, all cleaned out. What are we looking here? Well, we're looking at market structures. Now you can see swing highs, you can see swing lows. See one there. All right. So depending on what I'm doing, for argument's sake, whether I do this tomorrow or not, who knows? If I'm looking at this moment in time, the first thing that jumps out at me is range. And why is it range? Because the market's not going anywhere. Straight line, straight across. There's a high, there's a low. There's not a great deal going on. So it's not trending. And how do I know that? Because I can see it. Looking at it. And this is something that a lot of traders they're looking for, this mystical system. What's wrong with your eyes? Why can't you just trade what you see? Don't trade what you think. Trade what you see. Well, what I see here is a range. And it's been in that range since the 30th of November. Right. So, I've got a choice at this moment in time. It can retrace on itself. And I've already got some guidelines because it's telling me. There's a swing low there. And there's a level it touched. So if I'm going to the upside following a retracement of this move, there's an entry point, there's an exit point. Very, very simple. Why is that? Because it is above a strong support and resistance, and that is a tested level. So if it gets it to there, why can't I take some money off the table? No one says that I can't. If it breaks through, I can look to here to get some more money off. And then I'll be very careful at this one. And the difference between the lines is very simple. I'm expecting the dotted lines to be broken, but I'm expecting the solid lines to hold. So the dotted lines become sort of target points, and the solid lines become complete exits. And that works the other way. Because if I'm looking to kill a trade off, when do I kill it? I kill it at solid levels. It's that simple. So here is a thinking point. Because you've heard me talk about two stops. You know, you have your soft stop and your hard stop. And the difference between them is your thinking stop or your soft stop is where you think to yourself, am I right? Am I wrong? If I'm right and I still believe in the trade, I'll weather the storm. Or if I'm kind of on the fence, I might reduce so much of the trade. Because who's to say you can't scale out of a loss as much as scaling out of a win?
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
And you often do that, don't you? You'll see the market move for you and you'll snatch at the money. Why? Because you don't want to lose it. Well, turn that on its head. What if you were losing money and you snatched at the loss? What do you think about that? Now, first of all, someone will go, no, you're just giving it away. Am I? Well, what's better? If I reduced what was going on, have I not just saved myself money by not allowing it to go to full stop? Because if it goes to full stop, I'm fully exposed and I lose the lot. Whereas if I took so much off the table and left a little bit, that little bit might turn around and go back to target and actually pull you out at break even. But if it did go to your hard stop, because there is a difference between the two. Your hard stop is just the market takes you out and you don't have a choice in the matter. It's hit your stop, that's it. But it hasn't cost you as much because you took so much off the table. Something for you to think about. And that's what all of these levels are for. They are for you to basically manage your trade. And you've heard me talk about trade management many times. I often get told and asked, what's your strategy? Tell me your strategy. I'll be fine with a strategy. No, you won't.
I don't know where you get your delusions, laser brain.
And I know that's a controversial thing. I prove this. I asked the guys in the Discord, and if you go through the videos you'll see it. I said, give me a random chart, a random time and a random direction, and I'll trade it. So it was a coin toss. The difference is when I traded it through trade management. In other words, I waited for the optimum moment for a pullback, because it doesn't matter what your bias is throughout the day. You can go, well, I am long always. Doesn't matter what I'm doing, I am long. That's fine. Because even in a trending market that is going backwards, it will pull back. Because no market can move in a single direction indefinitely. And it doesn't matter where you are. So if you're looking at an hourly chart as we are here, that went down. So who's to say that you couldn't wait to find your entry point, which in this case would be this consolidation here, which is held on a solid level, and then trade long. And then you're coming into the next trade. Well, you go down, 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 and you can do nothing more but candle count. And what do I mean by that? Well, it's very simple. If you have a series of candles in a single direction that stalls at a reasonable level, in this case here, and you entered on the next green candle, is it a reasonable assumption that there might be two green candles? Because how often does it happen after a situation like that? It happens more often than you think. There is a solid move down. There's the first green. It found support and resistance, 1, 2 in the opposite direction, using a level to get out. Now, that's going against the grain of what was going on with that move. But then you need to do your homework and think to yourself, well, why did it stall? Well, in this case, if you're looking at that, it will be a reasonable assumption because it's range bound. And if it's at the bottom of the range, it's going to run out of steam. If it breaks through that level, then could this be sort of a correction because the markets have been moving up? Who knows? But you've got to look back in time to give you a clue to what's going on in the future. And what I'm driving at with that is, if you've made a choice, as long as you have a plan for what that choice is, you can still make money. So you can have a deep trending market, which, let's be honest, all of the indices recently have been on a massive upward move, and they've been on it for months. But you still get short opportunities. It's just knowing what to look for. So in kind of summary, I do the same thing every Sunday. I'll grab a coffee, and throughout the day I'll prepare my charts, and then once they're prepared, I'm ready for the coming week. And it means I have very little sort of, well, I was going to say analysing, because I don't need to do it anymore. I've already done it. And that's one of the reasons why I'm very relaxed when I'm in the charts, because I'm not flying by the seat of my pants, which comes all the way back to the beginning of being underwater. Plan it. If you're just opening your laptop and going, give me a trade, I need a trade, I'm here, show me a trade, and then you're hunting from product to product to product to product, you're always going to be underwater. And why? Because you haven't planned it. You haven't given it the thought and the respect that the market needs. But if you sat down just for a couple of hours at the beginning of the week, looked at the charts and thought, right, I'm going to trade cable, I'm going to trade euro, dollar, pound JPY, whatever, just like a couple of products, mark your charts up, and then they are your products for the week, and wait and be patient, you'll find you're not underwater as much as you think, because you're waiting for your setup, You've already got your thought process in your head, and you're not tinkering, because there's nothing worse than flicking from chart to chart to chart. You get yourself lost in the noise, and that noise will put you underwater. So just something to think about, just some of my thoughts and basically a recap of what I do. So tell me what your routines are. Mine's the same, always. It hasn't changed for years, because it doesn't need to. Trading's been around for years, it's never really changed. And contrary to what all of these sort of flashy videos and everything are, there's nothing new. It's all the same. It's just repackaged.
You ding dong!
You were literally too stupid to insult.
So let me go open up a package. In other words, I'm going to enjoy my coffee. I'm going to enjoy Star Wars tonight because it's the weekend, and I do like to watch a Star Wars film across the weekend. Really cheers me up. And then get ready to do it all again tomorrow. So as always, guys, trade well, keep your risk managed, and above all, do what you love, and the money will follow. See you all in the next one.